Hey guys, welcome back to the third part of this training. Today I'll be going through candlesticks. So this is what you'll learn. What candlesticks are, how to read a chart and the candlesticks, naked price action, bullish and bearish candles, shadows, tails and wicks. So what are candlesticks? Candlesticks show their motion by visually representing the size of the price moves with different colors. So basically candles show the motion behind the price. So if there's a green candle, it shows that there's buyers wanting to push the price up. Alternatively, if there's a red candle, it shows that there's sellers trying to push the price down. So traders use this to make decisions when they're trading. It helps them predict long-term, short-term, and medium-term predictions. So basically traders use candles to predict price movements. And I'll show you a picture of what type of candles they look for. But I won't be going through what they are and how to use them, as this is an introduction to candlesticks. But in my later videos, I'll have a separate video where I explain how each of them occur. So as you can see on the screen, we have different types of candlestick patterns. So we have bullish candlestick patterns, neutral, and bearish. So all of these candlestick patterns occur on a daily basis, and traders actually use them in order to predict where price is going to reverse or continue. So I won't be going through any of these now, as it is the early days, but this is just an example of how traders use these candlesticks to predict where price is going to go. The next part I'll be going over is naked price action. So in a candle there are three parts: the upper shadow, the lower shadow, and the body. And it can either be green or red depending if it's bullish or bearish. So basically it represents a specific point in time, and I'll be going over what these exact points are. So there are two types of candlesticks, bullish and bearish. A bullish candlestick shows that price has increased over a period of time, whereas bearish shows that price has decreased over a period of time. Bullish is typically green, whereas bearish is typically red. So within trading, you get different time frames. So a candlestick can be represented over multiple time frames. So you can get a 4-hour candle, a 1-hour candle, a 5-minute candle, a 2-second candle. It doesn't really matter. It just shows you the period of which price is traded within that candle. The open and close is considered the candle's body. The high is the highest point of where price has been to within that candle, and the low is the lowest point of where price has been to within the candle. So a candlestick has two vertical lines extending from the top and the bottom of the body, and these are often called shadows, tails, or wicks. Like I said, the high is represented by the shadow, tail, or wick, which is the vertical line extending from the top of the body to the highest price, whereas the lowest shadow or tail of the candle is represented by the vertical line extending from the bottom of the body. So if the close is higher than the open, the body is green, indicating a net price gain. And if the open is higher than the close, the body is red, indicating a net price decline. So that's basically all you need to know about candlesticks. I have another video that explains candlestick patterns and chart patterns. But in this video, I feel like it's just important to get the basics out the way, and then you can learn more and more. So thanks so much for watching. Please make sure you like and subscribe. And the next video in Module 4, I'll be going over support and resistance, the most important parts of trading. Thanks again.